Hi, everybody. This is Trading Bitcoin. Here's a little fun for you. I will try my best to check the live chat, but we are in the woods, so this will be a good one. Tone, how is Phoenix? Is it as cold as this situation?
Not as cold, not as cold, but certainly a little bit colder than I expected. So here we go. Let me put my mic on. Certainly a little bit colder than I anticipated here in Phoenix. But yeah, let's see Thor. I want to see Thor.
He's going nuts. Nice. You've been streaming like a maniac. Tell me a little bit about yesterday's like 4 streams.
Oh yeah, no, it's crazy. Well, I needed to do that S&P 500 guy, and then we decided to do a morning brief with Jimmy to cover some stories, and then I had to do like 3.5 hours of my Bitcoin intervention with Ernie Hancock and Freedom's Phoenix. Not doing that today, but maybe we'll get back to doing that tomorrow. I'm staying at his house actually, like this whole week, trying to get some work done. But I procrastinate doing actual work by doing streams. So I still need to finish my presentation for Vegas. I need to, like work with my organizers of Vegas to get everything done. I need to get stuff for my webinar, my webinar this Saturday for those that signed up for my in-person workshops. And yeah, and I have to fix my in-person workshop for Vegas. So there's just like infinite amount of things to do, and I procrastinate by doing live streams.
Well, they've been awesome. And speaking of, this is another live stream. I will say one thing. Can you say one thing about you calling the top yesterday? Because I actually think, and I know I sound obnoxious, but that was your best video ever.
No, it was a great video, but that's why I also wanted to do one today, because it might not even be a top, right? It was an attempt to call a top. And I'm looking at the S&P now, and it's still hovering around that point. It was a good intraday trade with the potential to become a swing trade, with the potential to become a position trade. But I would not be in that swing trade now. I would not be in that position trade now. I would have taken it as a day trade because it didn't evolve into what I thought it would evolve at this point in time of the day. It's 1 p.m. now. It's Thursday. The jury is always going to be out till Monday, but the S&P 500 is so critical that I might be doing another video tomorrow and talking about it over the weekend. I tried sending this over to Tyler. I'm not sure if he saw my message, but Tyler and I should definitely do something at the before Monday to talk about the S&P. I think it's very critical.
Yeah, Tyler, I have him on call all day. I'm super busy. Yeah, that's my fault. But definitely, and especially before close Friday. Okay, without further ado, I cannot imagine what the live chat is saying right now, but hit it.
All right, let's go ahead. Let's go to screen share.
By the way, Giacomo and I are in for a Magic the Gathering tournament.
Yeah, you guys are insane, and I have like some Pokemon people coming, so you guys can play that as well. Maybe I'm here at Ernie's house. I saw he has an Atari. You want me to bring that?
You know it. I mean, let's just pick it up a notch with this nerd fest. This is gonna be awesome.
I have no idea how you guys play that stuff. Like I was pretending not to be a nerd when I was younger, so I was like an athlete and stuff. At least I thought I was. You guys are nuts.
Yeah. Okay, I'm gonna mute myself. I'm watching.
Okay. I also sent out some tweets because I'm so tired. It's like every year there is a new round of shitcoins coming out, and everyone is telling me how they're gonna take over the world. Guys, stop. It's bad. Like, look, Grin and Beam are shitcoins. I don't care what former prominent Bitcoiners are on board. They're gonna look very, very silly. They're shitcoins. They are useless. The only good thing about Grin and Beam is that the people that thought that Monero was secure and anonymous now have competition for another secure and anonymous shitcoin that it remains as useless as Monero always been, right? The only good thing about EOS is that it is just as useless as Ethereum, only has taken a bunch of Ethereum users. The only thing useful about Decred is that it's just as useless as another altcoin, like a Litecoin, like a Bitcoin Cash, or like a Dash for your governance model. They are all garbage, okay? Like the person I really, I think I have to go off on it. Like the person I kind of feel bad for at the moment is actually Andreas, okay? Like, look, we all like Andreas. God, I hope I'm not blocked by Andreas at this point. We're all liked by Andreas, but Andreas sends out this tweet about Ethereum hard fork being delayed. And just read the comments. Just read the comments, okay? Man, like to be honest with you, like Leah is on right now. Like if you think I get a lot of trolls, just wait till you are a prominent Bitcoin person that even at any point in his life says something good about a shitcoin. I mean, I feel bad for these people because just read the comments of Andreas's tweet, and Andreas's tweet is not even pro Ethereum. It's just a tweet telling the world that Ethereum has to hold off on their hard fork. Okay, just read it. Just read it. Just read all these comments. Look, stop. There will be another round of shitcoins in 2020, and they're going to be just as useless as the shitcoins of 2011, like Litecoin and Ripple and God knows what else came out in 2011. Guys, just stop. Let it go. Let it go. Okay. Okay. Now let's talk about some markets. Okay. Let's see. I'm going to look at the price of Bitcoin. I don't know what's going on. It's not really moving. I don't really care. The weekly chart jumped up a little bit. We're back to 3620. It doesn't matter. The daily chart is stuck on a blue line. Doesn't matter. Here is the 12-hour chart. Doesn't really matter. Here is the here's the 4-hour chart. Again, doesn't change anything. Like I think the only chart that's borderline interesting is the 1-hour chart. Here's the 1-hour chart. Oh, I'm not. Hold on a second. Let me make it normal zoom. Not sure why I was on 80%. Let me zoom in on this. Let me make this big screen. Here we go. So I guess the only chart that's borderline interesting is the 1-hour chart, only because of these two head fakes, right? So we were establishing a base and we crashed below that base. So Bitcoin went from above 3,600 down to 3,530. So Bitcoin dropped almost $100 from of this candle range in 1 hour, and then rallied all the way back. And then it moved to the other side. So in a span of 1, 2, 3, 4, 5, 6, in the span of 7 hours, we went from about 35.35 all the way to 63.50. And this candle was also a reversal candle, but we're now up here. Now we're still on a downtrend. We're just catching up to some moving average. Like that's the only thing that's interesting, is that every time it's like these, I mean, this is what they refer to as the BART pattern. But the problem is you can't actually trade the BART pattern, right? Because look, everyone expects the BART pattern to go back and forth. And here it is. You know, you went up and then you consolidated and then you crashed down. But then you started to consolidate again. It doesn't mean you're going to go back up. In fact, you crashed down again. You consolidated again. And if you were following this BART pattern, you would have expected to go up, but you didn't go up. You crashed down again, right? And then finally, you went up. So this is pretty much random. It's not too random. I mean, there's some big trader that's doing this. It's not random to him. So unless you found the secret of predicting which way the big swing candle is going to go, you can't trade on this level. Because look, this was 1, 2, 3 to the downside, 1 to the upside, 1 to the downside again. And I don't even know what you call these, right? They're not as powerful as that. So you can't assume that after you go up like what, like $300 or $400 in a single hour, that you can't assume that that's not going to happen again. Like this candle could have been in the same direction. It didn't have to be to the downside, just like this candle was following in the same direction as the prior $300 drop candle. So it's not random to the people that have insider knowledge, but it's random to the average trader. You cannot predict which way it's going to go. So you can use technical analysis on a higher level time frame in order for this not to affect you too much, or you have to keep your stops very, very tight. Okay, those are your options. All right, so Bitcoin is not interesting to me at the moment. Now the amount of shorts are deleveraging, so the chances of going lower are higher. GBTC hasn't done much. Heard something about the, oh yeah, I was publishing stuff. So Ethereum, I don't care. Oil, I don't care. Oh, oil pulled back down. Nah, oil isn't interesting at the moment either. Okay, the S&P 500. This is what's interesting. The S&P 500 is the one interesting market right now. Let me get my annotations back. What is this? Oh, that's the thing. I know what that is. Okay, so here is the S&P 500. Okay, here is the daily 9 on the S&P 500 that I've been talking about. Look at the two prior 9 sells that we had. We had one back in early November. Market immediately followed with a substantial correction of 200 points on the S&P, followed by an eventual correction all the way down an additional 300 or so points. The 9 prior to that was pretty much at the end of the year high. There was a 9 all the way at the high of 29.41, literally at the top of the market. There was a 9 right there. And from there, we had a substantial correction. So it is pretty safe to assume that this 9 should be paid attention to. Now, I have been looking for, if I extend, which I haven't done really, but like if I extend this parallel channel, it actually perfectly rejects the 9, okay? Perfectly rejects the 9. Now, what was I expecting? And you can check my Twitter feed. I was expecting yesterday to be the top of the market and for the market to correct. Now, how far and how long did I expect the market to correct? I expected it to correct at a minimum of 1 to 4 trading days, and at a maximum down to $2,500 if I was to assume that this is going to be the low for 2019, or let's say this is going to be the low for 2019, right? Because technically the actual S&P low of 2,300 took place in late December of 2018. So the low for 2019 was at 2,440, right? So for me to maintain the 2019 low of 2,440, the S&P 500 cannot fall below 2,500 and close there. If the S&P 500 falls below 2,500 and closes there, I am now looking for a significant bear market in the stock market. If we do not fall to 2,500 and below, I am expecting the stock market to go to new all-time highs in 2019. Okay, that's the main difference that's going on here. Now, in order for me to time the top of this 9, I don't know if it's going to be a top at all, but statistically, I'm expecting this to be a top. Now, the safe assumption is to assume that it's a short-term top and not a long-term top. And if it's a long-term top and you're in the short trade, great. Okay. So my goal in yesterday's video was to zoom in on the 10-minute chart, and you're seeing the 10-minute chart right here because the daily cash S&P looks very similar to the futures, which is what I just looked at. So here's the cash S&P market. So this was in yesterday's video. I talked about timing the top, and I can bring in my annotations as well. In yesterday's video, I said that, hey, the exiting of the long trades and the entering of the short trades was statistically probable in the vicinity of 26.23, 26.24. I literally timed the very top of this market in yesterday's video. Now I ended yesterday's video right at the bottom, like right at the bottom of this candle. Now, did I expect lower prices? Yes, I did. What was I expecting? I expected at a minimum to hit this purple line, which we did. But I actually expected us to close the gap from the prior closing point of the S&P 500. As you can see, we did not close that gap yesterday, even though this was a profitable intraday trade. Clearly, this was not a profitable swing trade. Later that day, we went higher. Now, I also did a video at the very end of the day where I had to end it 10 minutes before the market closed. And I believe my final words were, you know what, let me check that audio is good and video is good and everything. And I believe my final words were, I am not surprised if the market would sell off at the very end of the day, because this is still a 9 daily that is topping the stock market. And I said, I would rather be short into tomorrow, which is now today, than long. Now, as you can see, I was watching the futures last night before I was going to bed, and the futures were down pretty heavily. So I expected the market to open low and go lower. But gaps like to close. So when the market opened early in the day, right here, as you can see, we did achieve the target that I intended on getting achieved yesterday afternoon. We achieved it this morning at the open. Now, as a day trader, I would not be in this trade at that point. The point of being a day trader is to go to sleep and not panic and actually fall asleep by not having your positions overnight. But if I was going to have a position overnight, like I said in yesterday's video, it would be a short position on the S&P, not a long position on the S&P, okay? Now, what happened in the morning? In the morning, we opened at a low, went lower, and immediately reversed. Once you reverse, the same rules apply. What you are looking for is the close of the gap. That would have been the moment the market reversed and the moment this early morning candle showed strength. That's why it's a hollow candle. I'm like, okay, I have a huge statistical advantage on an intraday S&P futures trade that the gap is going to close. Now, when do you recognize that? I don't know. But the market opened at 2609, and I hate trading the first 15 to 20 minutes of market open. I never do, okay? But if you were short going into the day as a day trade, and then you got to take that profit off the short trade at some point, because you don't want your winning trade to be a losing trade. Now the market opens at 2609 and moves to 2615 to close the gap. Now I used to love to trade the 10 a.m. reversal. This candle right here starts at 9:50 and ends at exactly 10 a.m. So the high comes in on this candle at 10 a.m. At 10 a.m., the market is at 2616. It then goes down. Now, this is going to be a problem. I can discuss that. And over the next 20 minutes, it goes down to 2612. That's nothing to write home about. That's only 4 points. Even if you traded 2 ES mini contracts, 4 points is only $400 per 2 contracts, okay? Still a decent amount of risk, not enough for me to take my profit. What happens on this swing to the upside in the following candle? I'm out of that trade. I'm out of that trade either break even or at a small loss, okay? So what are we looking at now, okay? This was the original trade that I intended to be the top of the S&P this week and potentially for the next, potentially into next week. You can see that we broke that line in the afternoon and we have been sitting right under this line now. This is the 10-minute candle, okay? What is this telling me? If I look back over on the daily chart, it's telling me, hey, this 9 did not reverse the price like Tone expected it to, because the stock market doesn't have to do what Tone says. I mean, everyone knows that whatever I say about the future of Bitcoin price has to happen that way. I have full and utter authority and control over the price of Bitcoin. However, I have not gotten there yet in the S&P 500. It doesn't, the S&P 500 doesn't listen to me the way the Bitcoin price listens to me. So therefore, we got to adjust to the times. Now, as you can see, we are going up. This 10-minute candle, I believe, must have just ended, right? I'm on a 10-minute chart. So at the next candle. So what's going to happen here? I can just set an alert. By the way, the new indicator was released. You should now have an alert. I don't know if I can get this in time. Which alert do I have? Oh, I got 2 minutes. I got 2 minutes. Okay, let me see if I can get this done real quick. So you have to check what alert you're going to set. Nope, I don't want them both checked. That would be crazy. The green alert, right? So boom, I'm going to go here. I'm going to go to an alert. I'm going to grab my alert. This is going to be all. Does that work? No, that doesn't work. So I have to scroll down. I have to scroll down. I have to go to all counts. I have to go to greater than. I have to go make this a 0. I have to make this. I'm not going to exit. I'm going to only set it till tomorrow because I don't want this thing beeping at me forever. And over here, I'm going to put, instead of greater than, I'm going to put by green setup. Set up. Okay, and I got 1 minute. Boom. We're done. We got an alert. Okay, so that means that if the next candle is a green 2 going above a green 1, that's a buying opportunity. Now, this is interesting to me, right? Because there's a couple of things that are going on here. We're still not above yesterday's high, and we are coming up on the setup trend line. Again, I'm using the 10-minute chart. Let's assume I would take the long trade here, okay? Now, basically, because my short trade did not materialize, okay, the way I planned, I have to almost scrap that plan. As you can see on this 10-minute scale, I am happy to take the long trade at this point. Now, again, I'm not going to log into my account, but the action of the S&P 500 is telling me that, hey, we have strength. Now, normally I would not do this. I would wait until tomorrow. I would want to see a daily 2 go above a daily green 1, go above the 9. Now, it's debatable if you want to be above the close of the 9 candle or above the high of the 9 candle, but in this case, it's semantics. It's like, I don't know, 5 points. Like, it doesn't matter, right? They're within a margin of error. Now, we're still waiting for the green 2 to go above a green 1 to get an alert that, hey, you have a bullish trade on the table. Now, we can also say, hey, you could have done the same bullish trade 30 minutes ago when a green 2 went above a green 1, went above a 3. It wasn't as clean. It wasn't as clean because you just came off a 9. This 9 needed to go through its minor correction. Boom, there's my alert, and we're in the bullish trade as of right there. So this red line, it's at the same exact price I shorted at yesterday. Theoretically, of course, I can't do both, trade and do these videos. And now it's a green line. So I'm scrapping it all together. Here's the S&P 500. I have realized that my short trade did not, the short trade was profitable, but not as profitable as I intended. Now we're in the long trade. Now, where's my stop loss at this point? Well, my stop loss, I'm going to use the purple line for a stop loss, and I'm going to set it for the moment right below. By the way, this is what people pay the 0.1 Bitcoin to attend my workshops for, okay? And now that I'm not going to be teaching what is a candlestick anymore, and I'm moving those to webinars, this is the kind of stuff we cover in the afternoon sessions, which I can now expand upon, right? Now, the initial stop loss becomes this guy right here. Enjoy the free education while it lasts, because once I go to once I go to Patreon and the webinar models, this thing is over. So the reason why the long trade is entered here and not down there is because down there I have no idea if we're going to keep going down all the way to 0, right? I have nothing to cling to. But here I have a good entry. Here I have a good stop loss. This may be a losing trade. I have no idea, but at least I have structure. At least I have structure. Thank you to technical analysis. Now, we are approaching, using the 10-minute candles, Now, this is the end of the day. To be honest with you guys, if I was actually trading, I probably wouldn't do this. I never day traded at past 1 p.m. Every time I did, it turned out to be disastrous. Like the best time to be a day trader is between 10 a.m. and 1 p.m. After that, you go to the gym or something, okay? Like you stop. But again, for educational purposes, this is what we're doing. Also, as a day trader, you don't want to hold your trades overnight. Now, we also have to talk about the fact that tomorrow is Friday. Being Friday is critical. You should also pay attention to, news and economics and earnings that are coming up. Like, I don't have time for that at the moment, right? All of that factors into your trade. But right now, we have a trade. I don't even know if Leah's still on. Probably not. I hope she's playing with Thor. I'm not looking at your live chat either. No, I'm not going to look at Forex today, guys. I'm not going to look at individual stocks. I'm focused on this at the moment, right? So here's the deal on the S&P 500. Your 9 did not reverse your price. So it's slowly starting to become clear that this is not a trend-changing 9. It's a continuation 9. A 9 is always a half full, half empty in this particular case. There are 9s that are not half full, glass half full, half empty. There are very critical 9s that take place that are way more likely to be reversals, kind of like this guy here, which was on the S&P cash, was a 9 combo 13 on the same day after an unreasonable run-up, okay? On cash, it was 913 the same day. In the futures market, the combo came earlier. So there are 9s where you can be more certain that it's a reversal type of 9. This is the kind of 9 that can really go both ways. And you have to trade it strategically. And the way I'm trading this 9 is my anticipated action of this 9 was going to be this 9 would lead to a 1 to 4 candle correction, potentially bigger. But hey, if it's not giving it to you, it's not giving it to you. You can always turn your short idea into a long idea. So let's go back to the 10-minute chart. Okay, so this long trade as of right there is working out. Again, where would I do this trade? I would do it on the S&P futures market, which is unreasonably leveraged. I mean, it's pretty much 100x leverage. It's 50x leverage. It's like imagine trading Bitcoin on BitMEX with 50x leverage. That's what this trade would be for me in the S&P 500. Now, here's a critical point. We are now breaking the setup trend line, which was the highest point in this 9. So if we close this candle right there, we have about 5 minutes to go. If we close here, we have just closed at a brand new swing high on a 10-minute level. That is very, very, very critical. If we can close in this vicinity at the end of the day, okay? And by the way, right after this candle, I'm setting a break-even stop on this futures trade because there's no way in hell this trade is going to lose me money at this point. I'm not doing it yet. I'm going to wait for the candle to close, okay? But I am almost ready to do it, right? Well, actually, let's see how much it moved. From 26.23, let's say it's 26.23 was the entry. Right now, you're at 26.25 and a half. We went to 26.25 and a half, right? So that's not a lot. That's only 2.5 points of the S&P 500. But in terms of the size of the candles, it is significant enough to say, hey, I have a giant leverage intraday trade. I don't normally like to trade intraday, but I have experience in it, which is why, again, I teach people to be more responsible traders so they don't lose all of their money. I am going to wait for this candle to end before I adjust my stop loss, but that stop loss will probably be adjusted. Again, I'm not sure why I'm doing this. This is my entire afternoon session with people at my workshop. Enjoy this live stream. May take it down one day. But this is pretty much how we're trading. I'm only doing it because the S&P was really, really interesting. So again, tomorrow is going to be critical because tomorrow, if the market is bullish, you will have a daily green 2 going above a daily green 1, and it needs to happen in the S&P cash, not the futures, right? Because the futures do strange things in the off hours. You can't go by that, okay? So it has to happen in the cash market in tomorrow afternoon. Now, tomorrow is also a Friday. So, and you don't want to enter your swing trades on a Friday. That's just silly, because then it's a bad idea. Trust me, from experience, a bad idea, right? So most likely, and you can read my tweet. If you go to the tweet, if you go to my Twitter, if you go to my Twitter, by the way, shout out to Daisy. Amazing work, Daisy. That was awesome. Thank you for that. Great job. See you in Vegas. So if you go to my Twitter and you click on today's stream, and then you click on this picture, I explain it all right here where it says bottom line. Look for a possible top around 10, 11 a.m. That was yesterday. Then look for a 1 to 4 day correction before reevaluating the situation. We were looking for a 1 to 4 day correction. It started like that yesterday, but it didn't finish like that yesterday. So clearly the fall below 2,500 has just become way more unlikely. And that's all the bear market. And then right here, the last part. However, if we are trading above 26.15 on Monday, and I specifically said Monday, this I could have said Friday, because it's the same kind. The only reason why I said Monday and not Friday is because of the fact that it was Friday. If the same situation was happening on a Monday, then I wouldn't have to wait till the following Monday. I could have said on Thursday, right? So because I just don't like, buying into trades on a Friday unless they're strategic options trades where time works in my favor, not against me. Like the weekends work in my favor and I profit from the time of a weekend. It's very likely that the low for the year is in. So if we start trading, and again, it's supposed to be Friday, but because markets aren't 24/7, I have to wait till Monday. And then we're going to, and then I'm looking for more upside, right? Even though Tyler and I talked about how this is a very dangerous zone to be in a trade and probably not a good idea. Okay, so let's go back to the S&P. Beautiful. So right now we have had a full candle close somewhat high. The next candle is now opening above the setup trend line, which we broke. We closed slightly above the setup trend line. I can tell you where that setup trend line is. That setup trend line is at a high of 26.2463, and this candle closed at 26.2461. Interesting. 26.2461, 26.2463. What's the value of the setup trend line? Do I have hold on. I'm curious now. Because we technically closed 2 cents lower. Right. Well, it doesn't matter. While I'm in the weeds, which I'm going to go to, I'm going to set a break-even stop loss, right? Again, this is an intraday attempt at a trade. So the entry was this green line off the alert. That was, let's say, 26.23 flat, right? And you can't trade the S&P cash. You got to do this in the futures market. I understand that, but this is for educational purposes, okay? So that's basically your stop loss, one tick above that for your exit. Oh, that's right. Yeah, there it is. There it is. There it is. Yeah. So we didn't break setup trend. So the code is functioning absolutely correctly, because you can see when because that's what I said. I didn't see a red dot there. Thank you, my developers. You got it right, because I got nervous there for a second, because technically this setup trend line is not broken yet. We came up 2 pennies, 2 cents shy of breaking the trend line, but the current candle is breaking the trend line. That's why there's no red dot there. But if the current candle falls back below the close of the prior candle, the red dotted line will still be there. That's why I saw that red dot appear and then disappear, right? So the current candle is breaking setup trend. The prior candle did not. Okay, this still gives me confidence, and And here is that trade. Now, again, this is intended to be a day trade. If the S&P 500 closes strong at the top of the market, would I be willing to hold this day trade into tomorrow? The answer is it depends. Absolutely, I will not hold all of the trade. I will certainly take some of that trade off the table. If your trade is only a single futures contract, that's kind of like you can't split that, right? So you're stuck with it. But if your trade was X number of futures contracts on the S&P 500, you can certainly take the majority or half of that trade off the table and take your profit at any point you like. At any point you don't like this trade anymore, you take your profit. But there's no way in hell this trade is going to cost you money. And this was your entry. And this is why I've added an alert of green twos above green ones. But you can't do it stupidly and you can't do it blindly. You have to do it at a good point in time. Okay. Like this would have been another good time to do it down here, but this one is actually a lot cleaner. As you can see, the S&P continues to go up, and that is great. All right, let's go back to the bigger picture. Let's go back to the bigger picture. Here's the bigger picture. The bigger picture is that we now have a full candle that did not correct. There was another bullish candle after a 9. Now, tomorrow can be a green 2 above a green 1 on a daily chart. The only thing that's preventing me from entering that swing trade to the upside tomorrow and playing the countdown phase is the fact that it's a Friday. If it wasn't a Friday, I'd be in. So I would rather wait till Monday, see us trade open and stay open and keep trading above this line of 26, whatever that purple line is, 26, 23, well, the current line, right, the current entry. So as long as I see us trading above that, we are all good. All right. So there's nothing more I can say here. This trade remains bullish. I want to see a close above the setup trend line. I want to see, we already created a new closing high on a 10-minute candle. The current 10-minute candle is, it closed at 26.2460, and the prior was 24.60, right? So we already closed 26.2460, 26.2460. Oh wait, they're identical? Holy shit! Look at this. So this is the close of this candle right here yesterday. The 10-minute high close was 26.2461. You can see it right there, right? So that's if I go up and then you move your cursor to the left a little, to the right a little bit. So there it is. The close was 26.2461, and the close right here, 26.2461, right? I mean, is that a coincidence? I'm not a conspiracy theorist, so I'm going to go with yes, that is a coincidence. Okay. I still think we're going to break out. As you can see, the current candle is pulling back. And if it does, it does. I'll take the break-even trade because this is weird. It's a little too weird for me, right? Like the probability of these two, of the 10-minute closing high being to the penny as it was yesterday is a little too weird for me to manage. But yeah, so I don't know if I'm going to be with you till the end of the market. I'm not really, again, this is why I don't like to day trade, and I prefer to do just videos. Leah's still on. I don't know if she's on my stream. Any good questions? What do we got here? What time is it where I am? I may have to do an interview at noon. I had no idea this was on my calendar. One second. Hey, Leah, you're back. Maybe not. Okay. I may have to go in like 5 minutes to be on somebody's show. I have no idea. I have to figure that out too. Would you consider all new Grin and Beam are scam coins? I don't know how many more times I have to say it. All right. Anyway, yeah, I have to get going in like 5 minutes to do an interview that I forgot about. But yeah, this is it. And once again, we could not break the setup trend line. The setup trend line is at the high of this candle at 26, 23.81. Why did this change? What's going on? 26. Oh no, sorry, the high 26.24, 26.24.63, and the close of this candle was 26.24.63. So it was identical to where the line is. It has to close above that line. So we were 1 penny shy of breaking that resistance line, and we're still struggling. We're still struggling to close above that line. We closed 2 pennies below the line. We closed to the penny on the line, but we need to close above that line. And the S&P is on a 10-minute scale is struggling to close above that line. If it can't close above that line and it starts to go down, well, guess what? I'm taking my stop loss and I'm getting out of this trade. It was a intraday trade anyway for a few minutes. If you want to make sure you buy 2 cups of coffee instead of 1, you get out of this trade right now immediately. Okay, anticipated a breakout, entered a good trade, does not work. If it doesn't work out, then it doesn't work out. Okay, and this is how you preserve your capital and go on trading. Okay. I don't care about volume, guys. When have you ever seen me care about volume in a trade? It's very rare. Very rare. Yep, there was my one alert. Talked about that. Yeah, so we couldn't get above that line, and it's unfortunate, right? I anticipated that we'd close above that line and continue going into market close. That is not happening. So hey, scrap this trade and try again, right? And this is the thing. You keep trying. You try the short trade, made money, didn't work out. Try the long trade, made a little bit of money, didn't work out. But imagine if every trade that failed you also made you money. And there it is, and you're out of that trade. Okay, you're out of the trade, and now we wait. The day trade that could have turned into something more has also failed, and the market continues to the setup trend line, man. It's again, the indicator is very, very useful, and this is why you get out of that trade before your winning trade becomes a losing trade, and now you're totally screwed, right? Now you got to take a loss, or now you have to, pray and hope. Either way, you should be out. You should take the loss because don't mess with this current candle, and try again later. Wait for the count to reset. Wait for a red price flip, which is going to happen on the next candle. You can wait for another green 2 to go above a green 1. We have an alert set that can go ahead and do that. Or maybe the market will reverse, right? I mean, again, you still have to decide what kind of a 9 it is. So today's candle and tomorrow's candle are all there for you to try and evaluate what type of a 9 this is. Yesterday, I would have said we're expecting a correction. Today, I'm saying we're expecting continuation. But if there is a big crash to the market in the last 2 hours of the day, I'm going to go back to, hey, it's a correction. So you can continue to do that. Tone, who's the author of the TD script with alerts? I am. You must be new here. Though my coding skills aren't good enough, so I have assistance. Thank you guys for helping me code this damn thing. I coded the first version, but then I needed some professionalism. Okay, so there it is. I have to get going, guys. I got to do an interview with, I think, FUD TV. And I'm going to go ahead and do that. I have no idea if it's going to be live streamed or pre-recorded. But this is it. Please check out the Unconfiscatable conference taking place next weekend in Las Vegas. And here is the agenda. Here are the speakers. I will be in Vegas as of Monday, trying to do the best we can for this conference. And hopefully it all goes well so that there's going to be another one. Anyway, check that out. My workshops that teach people what I was apparently teaching borderline for free in this video can be found here. If you go to workshops, you can sign up for 2 seats left in Vegas next weekend, lots of seats in Paris, and a few seats left in London. I'm trying to teach more of the hands-on stuff, less of the basic TA, which I'm going to move to webinars with a Patreon, and hopefully there'll be an equivalent in Bitcoin soon. All right. I gotta go. If you want to support my work and keep getting this free content and not make me feel like crap, please sign up for TradingView using my affiliate code, TorGuard. These are the only 2 that actually give me some kind of a kickback. Blockforce does as well, but not many people are buying mining equipment these days. And of course, if you want to do your Amazon shopping, please click on one of these links and do any Amazon shopping that you like. And that also helps support my free work. All right. No, the indicator is proprietary. The code is proprietary. You can click on indicators and you can read all of this, and that's how you can get access to it. It is not openly available to anyone. I think I give away enough free stuff. All right, guys, I will talk to you all on the next one.